Welcome to Lawbalization, Making Sense of the World, where legal insight meets global perspective. Join me, your host, Jonathan Bench, as I sit down with leaders and visionaries to explore how law and business shape the way we live, work, and think. Let's make sense of the world, one conversation at a time. Welcome to Lawbalization. Today I'm joined by John Brittell, who currently serves as the managing partner at Six Figure Ventures, an early-stage VC fund focused on technology in Africa. He has resided in East Africa for over 2 decades, among other emerging markets such as the Czech Republic, Uganda, Tanzania, Kenya, Thailand, and Vietnam. He has served as a board member of the American Chamber of Commerce in Uganda, as well as currently serving as a board faculty advisor at Cavendish University, a local entrepreneurship and technology-focused program. John, my friend, welcome to the podcast.
Great to be here, Jonathan, and good to see you again.
As always. All right, let's go to your background. I gave you a very little tease, but you have such an interesting and varied background. So please take us back a ways from your time in the U.S. We also met at George Washington as graduate students together in 2011, 2012. So run us back through how a guy from Northern California winds up spending 2 decades in East Africa.
Yeah, that's a long story. I actually just wrote a little blog piece on kind of the founding of Amani, my predecessor, when we were doing corporate advisory here. So maybe I'll just go back just a little ways before that. So obviously, I had spent. I'm originally from California. I spent a couple years after graduating Davis in the NGO world fundraising in Sacramento. And then not long after graduating, about just a couple years, I ended up driving out and did a wonderful road trip for like 30 days across the United States from San Francisco to Washington, and ended up in DC and immediately got involved with sort of international broadcasting. And so I was fed into this sort of global world immediately upon reaching Washington. And just, I loved volunteering. I'd always been a volunteer and had always been helping out. And I started writing grants for United Way. And one of the guys who was there, and the way they work it is they kind of match up organizations that are looking for certain talent. And I had volunteered for this grant to go and write and support these guys. At the time, they were bringing, the grant was to Delta, I think. It was to get airplane tickets for something like 40 kids to come over so we could tour them up and down the East Coast and, raise money and raise awareness around education and the situation in Uganda. This was back in late 90s, early 2000s. And so that was kind of my introduction. It was actually through a volunteer experience. A gentleman who I ended up befriending, a gentleman named Ed, who ended up becoming my friend. We ended up going back to Uganda together, fell in love with it right away. And that was kind of, like sort of wrote the history, and I've kind of been there ever since. But that was sort of the moment when in DC, being a part of that global community, having an opportunity to do something outside of, your own community in another community that's totally foreign to you, that you could be a part of. Obviously, in this time period, I've been to Thailand, of course, which is where my family's from. I had lived and worked in the Czech Republic for that organization in Washington. And so I'd been somewhat traveled in a number of different continents, and I'd never been to Africa, and that was just something that was really interesting. And so it was still using my skill sets of fundraising, writing grants, finding donors, raising money for specific events. That sort of drove me into this experience of Africa, specifically in Uganda. And that was sort of a big sort of turning point in my life as well, because at the same time, my mother was going through a lot with her cancer. I was thinking about, do I stay in the private sector or do I do something else? So there was a lot of decisions to be made. And then this thing had come up with Uganda, and it just turned out that was the thing that I ended up choosing. And so probably about maybe 2 or 3 years after getting involved with this organization and writing grants and fundraising, I think we had brought these kids back like 2 or 3 times in this window. An opportunity came up after yeah, about 3 years, where the guy wanted to put somebody on the ground. Ed wanted to put somebody on the ground. And it was just at that time when everything was happening, whether it kind of started to get a little bit better. I kind of figured out that, I didn't want to stay where I was. And it was just sort of a very serendipitous opportunity. And I was like, okay, this is a perfect time. Why not now? And I took the leap, and that was over 20 years ago. So that gives you a little sense of that timing and in life. And when you're at that age, I think I was in my mid to late 20s at the time. So yeah, it was just a great opportunity to come out and do this. So that's a little history there. From that time going forward, even probably leading up to the time when you and I met in grad school, I had spent some time here, basically sort of doing some forensic accounting, basically for the same organization, looking at mismanaged funds, looking at resource allocation, that kind of thing, and being on the ground. Trying to help out this company. I had a little bit of a negotiation on coming out here. It was like, well, if I'm going to come out here, I can't just do that. I have to do something else. So I ended up, negotiating with Ed and said, hey, if you can take care of me and let me operate this farm, I'll go ahead and do the thing that you want me to do for this forensic accounting thing. And we agreed and kind of went forward. And so we had sat on this piece of land in Uganda, and we had officially purchased it, actually. And I started basically being a farmer. So it was a flat piece of land. I think I started out on a tent and just started, tilling the land by hand. And next thing you know, people really got curious and came about and started helping me, like in the community. And so we kind of created this communal space for agriculture, and we built it into this sort of 600 farmer strong cooperative that eventually we ended up building housing and warehousing and, storage and all that stuff. But that was over probably a 3 or 4 year period while I was doing this other sort of investigative work to try to figure out where resources were mismanaged and put. So it was a really fun experience. I remember, being a part of that experience was something where, there was always something new to kind of come forward. There was always a new project. There was always a sense of opportunity. As much as you were in the village and kind of outside of the urban setting, I was based in the southernmost part of Uganda near the border, just on Lake Victoria. So we're literally just below the equator at that point. So it's very warm, very tropical, and also very beautiful, and just had a great experience there. But it was from that experience and kind of what was uncovered from all the investigations that sort of led me to leave that area and say, hey, there's got to be another way. And so it wasn't long that once I uncovered sort of this, I guess you would call it a ring of some sort, where they were sort of pitting different country donors against each other. And in the end, didn't allow us to speak to each other, which is what allowed this local family to go ahead and take advantage of that situation and continually ask for more money and resources while they ended up doing other things and never actually doing the thing that the money was intended to do. But it was from that experience. It was from that experience that I was like, look, this is sort of enough. I've kind of done what I was asked to do. At this point, it's like way beyond me. So I said, let's, do something else. And, while we were on that farm, we ended up doing a bunch of really interesting work with basically, I guess you call them traditional doctors or witch doctors or shamans. And the reason we were doing that is because we were using a lot of local herbs and medicines to go ahead and treat basic illnesses like stomach aches and diarrhea and malaria and these things that were very common and prevalent, flu in the community. And the local infrastructure here, the way it works is, even though there's a national drug distribution arm, it's extremely corrupt, and medicines tend not to get to the village, like deep into the village. And so at Health Center 2 and Health Center 3s, you tend not to have much medicine on the shelves, which is why there's a big private sector for medicine distribution in the country. The public sector just simply doesn't work. So we ended up doing all that work with Artemisia, and then USAID ended up learning about it, and they hired me to go up north and do this project. This is, remember, around the time Coney was still there in 2007, 2008. And I'd gone up north and basically run the entire northern program for President's Malaria Initiative, which was USAID funded under Bush, former President Bush. And I did that for about 3 years or so, 3 or 4 years. And I think that those two experiences of being really rural and focusing in this area of agriculture and also happen to be medicine, but with this dynamic of commercial, but also doing this back end, investigative work, and then realizing what it was like, look, I don't want to be a part of that type of environment with the corruption. And then going into this other place where it was in a completely different part of the country, but now you're institutionally embedded in it. It's like, well, gosh, you're kind of just in the same world, just on two different sides. And I was like, look, there's got to be another way. And that's what led me to actually meet you. That's what led me to George Washington University, and make me apply and say, hey, let's switch from this donor dependent model or this NGO model. Let's go over to the private sector and see if we can still do good there, but maybe in another way. And so that's what led me into GW, and that's when we ended up meeting.
So that's a great segue, because through these years, 12, 13 years now, you've taught me a lot about Africa, about business in Africa, about the way things work on the ground, about the different, all kinds of things. It was even on your recommendation that I listened to, is it The Fate of Africa? Remember recommending that to me?
Yeah, it was originally The Fate of Africa. Actually, I think it changed to The State of Africa by Martin Meredith.
Changed the name
to
The State of Africa. Yeah.
Yeah.
Sound less fatalistic that way. But I remember spending time, and that's was close to a 25-hour audiobook, I think. And I remember it kind of just trying to drink in as much as I could. It was a great recommendation. Had a lot of fun learning more and kind of diving back into the post-colonial era and what development has happened since. So why don't you educate us again, or educate all of us a bit more about particularly East Africa, but talk about kind of the economic mix of Africa and what you see, continent-wise. If you can spend a couple of minutes doing that, it's always interesting to hear your perspective.
Yeah, absolutely. I think there's a couple stories here. One of them is the other, I guess, research arm that ended up doing a lot of reading on was the Brenthurst Foundation, which did a lot of work in understanding, and they still do great work in trying to find alternative ways to develop the continent and actually find ways out of sort of some of the traps that we tend to speak about in the context of development. So they're a fantastic resource as well. They both happen to be in South Africa. And so when I had come back to George Washington, this would have been in 2011, I believe, or the end of 2010. I had, in school, at graduate school in particular, we have an opportunity to kind of dive back into the issues that we're really interested in. And so I think you understand this. A lot of the student population was either coming out of maybe 1 or 2 years experience coming out of post-bachelor's, and some were coming directly after their bachelor's. I always thought that I don't know if that completely allowed people, students, to really understand what it is that they wanted or what they were after. I went into my master's program very clear on what I wanted to learn, what I wanted to know more about, but also the direction I wanted to use that degree for. And so that was my going into it. So I knew that, excuse me, East Africa was an area that I needed to know more about, but Africa in general as a continent, I knew there was a policy angle to it, which I really looked into from the perspective of taxation, from the perspective of among different jurisdictions. I was looking at it through the lens of capital allocation and investment. So I was very specific in what I was after going into school. But one of the classes I took is, remember, like you were JD MBA, I was MBA MA. So I was part of the Duquesne School of Business, but I was also part of the Elliott School of International Affairs, which is the feeder to State Department, which was an option, at the time, potentially. And I remember in one of those classes at Elliott School, I focused specifically on East Africa when it came to just understanding not just the macros, but sort of the geopolitics and what's going on here. But if you look at it sort of geographically, East Africa probably has the least amount of interaction with the West in the context of the United States. West Africa has a ton of interaction with the United States, whether it's through Liberia or Ghana or a number of those coastal towns, just because the trade routes are closer, right? You're physically closer, whether by plane, whether by boat. And so you have those ties in a little bit of a different way, where East Africa tends to be a little bit different. Our ties on this side are much closer to in India, China, this part of the world in terms of trade and economics. Of course, there is the Euro historic context, but you see in general in the area that a vast majority of trade and economy does happen within the region, which is, very promising. It's very good to hear that, South Sudan, Congo, Kenya, Tanzania, surrounding markets are really where a vast majority of trade takes place. And that means you can rely on these markets and create some kind of an economic sort of base for that, which is what's happening in the region. And so you do have an East African community. You also have an East and Southern African community. You have these regional blocks. Even in West Africa, you have it. You have these regional blocks which can interact with each other. And the goal now is to hopefully get them all to interact underneath one sort of policy, which is what the continental African trade policy is about. Just try to get us underneath one tariff regime so you can do cross-border activity. So you have that happening in general in Africa. In East Africa specifically, it's a little bit more unique. I mean, it's geographically unique because one, it's its own tectonic plate. It literally is separate from the rest of Africa. It has not only the lowest point on the entire continent in Djibouti, in a lake that's below sea level, but it's also got the highest point, which is the Mount Kilimanjaro.
I didn't realize that. That's fascinating.
Yeah. And it's also got a lot of the most geothermal activity along, not just in the Rift Valley, but the Great Lakes region, which is bordering a mountain range on the tectonic plate, right? Between where the two plates mix. So you have a lot of geothermal activity, which is why we are able to have some geothermal energy production in the region at a small scale, but it does exist. You have tons of water in this region. Food is not an issue in this. Water and food are not issues in this part of the world at all. Even though a lot of the ag is rain dependent, Uganda, you throw something on the ground, it grows. Like, you don't even have to do anything to it. So you kind of have this environment where food is abundant, and that sort of plays into the economics of what happens around here. I think the other thing you do have with East Africa in general, it's a pretty significant population. I think when you look at Africa in terms of quadrants in East Africa, you have about 350 to 390 million people. When you think about it as a whole, you do have approximately the same in GDP, somewhere around 400 billion in GDP. The total GDP of all Africa is like $1.2 trillion. So it's pretty small when you compare it to other markets around the world, but that's growing, obviously. So East Africa has, I think, 30% of that, which is a bit more than, some of the other blocks, which is good. It's got obviously one of the fastest growing populations, some of the fastest growing economies. So it's very unique when you compare it to a West Africa or even a Southern Africa, or even Northern Africa. Now, our development is a little bit not as developed as, say, Asian markets, and I would say even Latin American markets. We're probably the most behind from an infrastructure perspective, but that just sort of breeds that opportunity and says, okay, well, what else can we do considering those gaps? How can technology, then play a role in that, in shaping, what happens going forward? So that's a little bit about East Africa. Geopolitically, you have leadership in place. For instance, in Uganda, you have leadership that's been around for almost 40 years. In the next 12 months to 15 months, you have 5 elections happening in the region. One of them here. Tanzania's next in October. We've got ours in February. South Sudanese are electing. Rwanda just finished a few months ago. I think Ethiopia is also going up again. So you have a lot of political change happening right now. Potentially Kenya won't happen for another couple of years, but I don't think you see a 2-term president there, as much as he's done some good work. I think there's just too much, if you've been following any of the news, there's been a ton of protests and everything around not just taxation, which is related to the budget and spend, but also in terms of how the security apparatus is sort of treating its people on the ground. But even amongst all that, when you really think about doing business in this part of the world, there is opportunity. It's actually much safer than you might think based on all the news. You can function here and do business. There is a unique, there is sort of an understanding you have to have on how to do business here and how to relate with leadership here and how to relate with your customers if they're local. So, and it's really appreciating, understanding that to allow you to sort of function here on the ground.
That's great. So, in your interactions with global investor groups, what are some of the common misconceptions that you would see in and around doing business in Africa and maybe specifically in tech as well?
I think one, just very similarly to how I explained it, actually, the way that I explain East Africa is this context of you have this sort of large population amongst this big market in this $400 billion economy. There are what, 7 or 8 countries in this region, and so each one of them function within its own regulatory framework. They have their own cultures, they have their own ways of doing business. Each of those markets is unique in its own way. As much as you can say there's an East African sort of culture, it can be true if you're comparing it completely to, say, like West Africa or Southern Africa. I think that's true. But when it comes down to the economics, each market is unique, right? Each market is unique and has its own tariff regime, has its own way of doing business, has its own regulator for whatever business that you're in. So you kind of have to learn and figure that out when you're on the ground. It's not that you can just say you're doing an East African play. If you say that, you're going to have to do 7 or 8 different plays, right? If you think about the entire region. And so usually that's probably something that most investors get wrong. And they think that if you're investing in Kenya, then that infrastructure is the same as Uganda or Tanzania, which it's not. Not only in terms of the labor. So as an example, we're in financial services. If I need an analyst, I can go to Kenya and pick one up for, $1,500 a month. And he's good. He knows how to model. He's a good analyst, right? And I can get him to do the work that I need to be done. If I go for that same analyst in Uganda, I'll pay double the price and get half the work because the labor demand isn't here for the same skill set. Same is the case in Tanzania. And so just that alone kind of says, well, you're in a totally different labor market just across, we're right next door to each other. They're absolutely not the same. Whereas I think if you're based in Salt Lake City, if you're in Salt Lake City and you head over to, Dallas, which is not that far from you, right? Or if you head over to San Francisco, which is the same as like going from here to Kampala to Nairobi, it's an hour flight, but it's totally different. Like you're not going to get the same labor markets. You're not going to get the same infrastructure. You're not going to get the same basic level of business understanding. They're just totally different. I think there's that element as a misconception from investors. I think the other piece is, I think investors oftentimes underplay the fact that the informal markets play a huge role in the economy. And when I say informal, I'm not just talking about the economic part about it, but it's the informality of how you do business as well. It is a very informal way in terms of how business is transacted. And I think that's super important to understand. If you're a multinational, right, like a huge American conglomerate, let's just say Walmart, right, which is entering the market through South Africa, they've been trying to figure out this play in Africa for some time underneath Massmart, which is another entity which started a group called Game. And Game was sort of our Walmart on the ground, and Game shut down, right? They pulled Game because of a corporate acquisition, and now Walmart wants to come on the ground. But we haven't seen it happen yet because distribution is still difficult, right? We haven't had anybody really figure out that distribution conversation. And so Walmart's going to take a stab at it here. But you could imagine a Walmart coming on board thinking to itself that the consumer in Uganda is the same as the consumer in Kenya, which they're not. Or that the way you move product from into Kenya is the same way you're going to move product in Uganda, which it's not. I think appreciating that will help investors understand that you've kind of got to allocate your own research for each market, and you have to play them as different markets. And I think you'll be better off. We had another American corporate recently that's selling off its Uganda arm, and the arm that's coming on board is going to be a French arm of the same industry. I won't say who it is because it's still in the middle of happening. You could imagine that the Americans doing business here have a certain way of doing business, which is very top down, very rules based, contracts based, very much where we want large sizes of everything to make sure, whether it's customers or product or whatever, we want large of everything to make it work without much customization. When you look at a French way of doing business, it's the exact opposite. They will beg, borrow, and steal and do things in any way possible just to get business, and be extremely flexible and focused on small niche markets as much as they're going to focus on big markets. And so I think that's a huge important thing to understand for investors is you have to understand that nuance in terms of doing business on the ground. I think the Chinese have sort of figured that out. They've been doing this since, the 90s. And they've obviously, if you follow the Chinese story, it is based on a lot of excess debt and also favors that have been done on the ground, and this idea of infrastructure coming on board for other things, in the future for them. So they've kind of played their cards from a diplomatic angle in that way. So it's a little bit different, really, depending on what type of geopolitics you're talking about in terms of business, and all of it's happening sort of in the same place, right? Like you're going to see many different types of business taking place, whether it's Chinese, the French, the Americans, you see the Turkish, you see the Indians, which is a big business community here, all taking place, in the same market, and all seeking sort of a very limited resource purse in the end, all competing with each other, right? So that's how business is functioning here on the ground.
Fascinating. So let's pivot to tech. For the last chunk here, you have propped up Six Figure Ventures, a tech-focused investment fund. You know what tech looks like. I want you to answer two questions for me. First is, what does the tech penetration look like in your area? And then second, what does the underlying infrastructure look like for startups that are tech-enabled?
Yeah. So the evolution, like I was saying before in the bio. So this evolution of moving from corporate into early stage towards the end of that sort of regime. This is about 22, 23. So just a few years ago. So we made that move because we thought this was a great opportunity. You saw, in just from a VC perspective, in terms of capital coming in, it followed the same 2020, 2021 trajectory, just like in the States, where you had this boom of excess capital flowing to the market. We saw the remnants of that. Now, remember, contextually, we take in less than 1% of total global VC, right? So we're very small comparatively. But having said that, the numbers were somewhere around, I think in 21, we were around 2 billion. I think 22, we were around 3 billion. And then I think we peaked at around 4.5 billion. That was around 23, I think 22, 23. So $4.5 billion, you can imagine it's something, but it's not that much from a venture capital perspective for the entire continent. This is 54 countries, right? 54 economies. And a vast majority of that went to the fintech. You also saw things in other places with mobility, healthcare. You saw it with ed tech. So you saw some expansion of technology on the market. Infrastructure was a big play, whether it was fiber or Wi-Fi tech, which is currently coming on the market. Obviously, today you see people like Starlink trying to come on board, and then you see people like Tanzania throwing up rules saying, "Look, you can't function unless you go through one of our existing players." So you're going to see a lot of this sort of maneuvering to make sure that outside tech sort of is asked to work with local players. So there's some kind of transmission of technology, a little bit different than the way the Chinese played it, right, with the States and say Apple, in terms of purely manufacturing, taking on that resource, Apple training everybody on the ground. I don't think you have that same strategy in Africa, unfortunately. You see this thing where you're going to have local players sort of, you have to go through them. And I don't know if that's the right play because, Starlink can sort of sign up with, a provider here, but that provider may just be knowing a small portion of the real business and not really understanding how to grow it and understand the back end of it. So I don't know if that's actually the right way to do it, but you do have this general protectionist view when it comes to technology in these markets. And you have this view, most Western great VCs that come in tend to see this as, if you can make this investment, say in Kenya, I should hit 54 markets pretty quickly. And that's just not possible. You literally would have to go through 54 different regulatory regimes to do that. And that play doesn't become that easy play that you might think exists, say, in the States when you have 54 states, but underneath one ultimately government, which is the United States of America. So that's really significant in terms of how tech then is propagated, in the local market. One of the great things around tech that is happening, say with in the context of mobility, you do see some players really jumping into this mobility play and saying, okay, with EVs, how do we make this sort of a bigger market? But one of the most recent, posts I've seen on LinkedIn was this idea that, Africa hasn't eaten yet, so to speak. Like this idea that for them going green or doing the right thing somehow should come after they've sort of made their wealth. This is the psychological thinking of this. And part of that play comes in this fact that even though EVs would be a great, investment play from a climate perspective, and you see it amongst the donors in the foreign markets, you don't have it really happening too much on the local scene because you have a lot of protectionist policies supporting fuel and oil production and oil imports. And so that becomes a much bigger play, for these economies than dealing with, these EVs and mobility. But having said that, super impressed that the Uganda government's gone forward and invested pretty heavily into an EV manufacturing plant here in Jinja, and it's called Kira Motors, and they're doing fantastic work with a whole manufacturing line of EV buses. So you can see that there's some movement, and other markets are doing the same thing. Kenya's doing some great work under Kenya, which is the Kenya Innovation Agency. Tanzania is trying to create something in Zanzibar with an AI sort of platform. I think you see markets. Rwanda is doing the same thing in just next door. You see activity happening on the tech side where the government's starting to push its weight. It's just that, resources are fairly slim in general. And raising taxes, just like what's happened in Kenya, which is what's kind of created all of this protest, is the thing that everyone has to do. And unfortunately, it's the thing that nobody wants to pay, right? And so otherwise, there's no resources to go around. But I think tech in general is on the move, and there's opportunity here, but it is nascent. And I do think there is tech transfer opportunities and tech acquisition opportunities, and not just for understanding consumer base, but also for like building here. And so that's what we're focused on, is the building part.
And we're almost at time, John, but I selfishly want you to do a plug for your fund, because you and I have talked extensively about the VC model being broken, or at least not working in Africa. So can you talk for a couple of minutes about how you've structured your fund and why you've done it that way?
Six Figure Ventures is an outgrowth of a local origination issue. And so as advisors, origination obviously is a key function in addition to cap raising and a bunch of other things. But origination sort of becomes this holy grail of saying, okay, you actually have something that's investable, that's investment ready, that is a worthwhile asset to put time and resources into, and that investors will come and participate in whatever asset that is. And what we found on the local market is that's a much tougher story to sell than having it sort of vertically integrated amongst your own fund or amongst your own network where somebody's sort of starting from the very beginning. I think originating from the outside coming into an investor is very difficult. I think starting it yourself and sort of building from within allows that additional investment to come in a much more easy way. I don't think that necessarily solves the VC issue here in Africa, but there is a lot of rhetoric on this idea that VC doesn't work. I think it's because VC is misunderstood and people look at VC as PE, which is private equity. And the way we've designed our fund is a mix of that PE and VC in terms of its structure, tenor, timing, right? Which I can get into. But the reason we've done that is because we're trying to cater to the fact that if we want to attract local investors here, it sort of has to look a certain way, because a lot of local investors tend to see brick and mortar companies as where they want to put their money, typically real estate and land. So if you want to diversify outside of that, how do you get them to participate in something that's a bit more risky, that they can't see, that's not tangible? That's sort of the thinking that we have. There's another group, I think, here in Africa amongst this tech world and early stage landscape of startups, who believe that, VC itself doesn't work on the continent. Now, I'm not one of those people. I think it does work, but I think it's just misunderstood. And so I think the reasons they think it doesn't work is, because of this idea that you're pumping money in, you're expecting the founder to sort of implement and enact everything that he's been told. But The complaint on the side on this side that I've heard is that there's not enough infrastructure and resource for them to implement the thing that they're supposed to do. So they're having to build 10 different businesses just to get the one to work, as opposed to just building the one business, because there's 10 other people building the 10 other businesses that should be functioning for the one to work. So that's one way to look at it. But the way I look at it is, well, why don't we just focus on the businesses that need to work? So I guess there's other ways to kind of look at that from a VC perspective. I think for our fund, so our focus for us, we've got an anchor. We're targeting right now, currently our fund one is 35 million. We want to distribute in the region for Africa Tech. We're open to verticals, but we've seen some verticals which we really like. So for instance, we know certain ISP telco verticals we like in terms of infrastructure, Wi-Fi infra. We know that mobility is a big issue on the infra side of mobility for EVs. So charging stations, that kind of thing. We like this idea around AI, obviously, but AI specifically for the local market, which is contextual and business solution AI. And we like the context of AI and education in terms of solutions as well. We've also liked this concept of insurance and insurtech, just because that market needs to grow and scale some way. And the only way to do that is to aggregate. So we've got some really good ideas around that. And so this is just some of the areas. And of course, fintech. We're obviously into fintech as well. But yeah, so our fund is fundamentally, we're considered seed to Series A. We can do tickets as low as 250,000, and the idea would be is we'll max out at like a $4 or $5 ticket. We only want to participate in a very short tenor, so our max tenor is 24 months. Willing to give a window of 12 months, and then we have to do at least a partial exit, if not a full exit, within that time period. So we're not a long-term investor; we're a short-term investor. And that's very unique interest from shareholders. And so you kind of have to be in a position where you're going into an investment where you don't have shareholders which are, have been there forever. And they're like, why are you exiting and coming in after us? That's a conversation we've had to go through. And so we really like to kind of find a sweet spot and be at a point where we're one of the first, not the first, but one of the first guys to come in and participate and kind of take you to that point. Right now, our portfolio looks like mostly four of our founders have over $1 million in ARR. And our goal is to take them to $10 million in ARR and then offload them. Two to three of our founders are more at the 50 to 100,000 US ARR. And we want to take them to at least $1 million ARR and then offload them as well in that period. So we do take a portfolio approach. We know we can't do 100 deals at 50K each. Like, that's not our play. We do like a more mature founder, somebody who's got 5-10 years in the business. Somebody who's got a product on market making good revenue. Somebody who's raised capital before. Somebody who's dedicated to this business, not doing 5 other businesses, and this is one of them. So we like dedication of time. So we are looking for a very particular niche founder, and we think they're here. They are here on the continent. It's really just about identifying them. And so the origination play, which I mentioned earlier, is that missing link where it's like, well, the only way you can do that origination play is if you have a fund connected to it, which is what we're intending to do. And so the way I can know these people on the ground is because we're here on the ground. We're talking to them, right? We run pitch days every month, and we're talking to people on a constant basis on the ground in multiple markets. So to have that relationship, I think, is more powerful than just flying in and dumping capital into somebody where you don't have context, you don't know who the people are. And us knowing the people really matters, because as much as this is a big market, it is a very relationship-based society and community. And that matters, right? That matters in terms of our model and how we're doing this.
It's great, John. Thanks. We didn't touch probably half of the things I wanted to talk about with you, but that means we get to talk again in a little bit and do another episode together.
Awesome. Jonathan, really appreciate this.
Thanks for listening to Lawbalization, Making Sense of the World. To explore more conversations with today's legal and business minds, be sure to follow, rate, and share the show. Until next time, stay curious and keep asking questions about the world around you.